my question is for you. When would you recommend someone paying the 20% down to remove the PMI?
Okay, there are some mortgages that the PMI drops off after you get to that 80% loan value, okay? After you get down to 80%. There are some mortgages where if you start out with PMI, it stays on no matter what you do. Now, here's when I would make a decision on that. If I can, depending on what the interest rate is, depending on what my payments are, we would plug everything in and say, am I better off paying the PMI, or am I better off taking my cash and putting it as a down payment to get rid of the PMI? The true answer is I don't know. We have to do the math both ways to figure out which way is going to be better. So how do we know which way is better? I can know by plugging this in to this program here, and we're going to put it back on the screen. All right, how much interest I have remaining. I'm actually going to change this to a smaller subset. So we're going to reset the account. This is John and Rebecca Jones, by the way. We're going to reset the account and putting on something else. So what we're trying to figure out here, folks, is what to do and when. The true answers on this, people want to know what the rule of thumb is. What is the one thing I can do across the board? We want to figure out what it's going to cost us. And we have been taught to ignore what it's going to cost overall, not to pay attention to it. We are taught to focus on things that don't really matter, like what is my interest rate? How much am I paying? Can I get rid of PMI? We've been taught to focus on things that make us feel something. I feel like I don't want to pay PMI. It's a burden. I'm made to feel bad about it. But what I'm not told is how much is it going to cost me to manage this loan if I configure it so I keep the PMI, okay? Or if I get rid of it. But what is it going to take for me to get rid of the PMI? Could I use that money elsewhere to do something else for me? I don't know until we run the numbers. That's basically it, sir. I got a little story for you about a person that had a conventional loan. All right. So he had the opportunity to pay $100,000 down on a $400,000 loan at 3%. I told him, get the $400,000 loan. And he says, Don, but I'll have PMI. I said, well, if you have $100,000 as a down payment, then you don't have to pay the PMI, correct? He says, yes. So if you do it as a prepayment, then you knock off about 12 years off your mortgage. All right. And the bad news is you have to pay PMI 1 month. Jerron, does that make sense?
That makes perfect sense.
But by doing that, it saves him $110,000 in interest and knocks off 12 years off his loan instead of putting it down as a down payment and starting out with a 30-year loan just to avoid PMI.
I follow you now. So basically, it's going to depend upon your type of loan that you're working with and other factors that will determine if you can avoid it by making a prepayment or if you take care of them beforehand before you make that first payment. So
yeah,
each situation is kind of different based off of the loan product.
There you go. And what we want to know when we look at all the loan products that are available, how much is it going to cost you overall in interest cost? Because if you're supposed to pay $300,000 in interest and you end up paying only about $100,000 or $90,000 in interest, what can you do with the $200,000 in interest you did not have to pay, Jerron?
Buy another property.
There you go. There you go. Stop treating interest as the cost of doing business, and let's see where we can save on that too. Thank you for bringing your question to the stage.
But Don has some valuable information that can contribute to the quality of a person's life, and it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L. method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.